Today's Eye on Emerging Markets, we take a look at Russia's economic outlook. Our next guest expects it to remain weak and highly dependent on consumption. Rachel Ziemba is a senior research analyst at Roubini Global Economics, specializing in Central and Eastern Europe, the Middle East, and Africa. And she joins us now from our London bureau with more. Rachel, great to have you back on Fast Forward, and it's a good time. I think we spoke much earlier in the year about Russia, and quite a few things have changed. You just revised your forecast for growth this year down.
Thanks. It's a pleasure to be back, Lisa. Actually, what's funny is we've revised it down. It's actually fairly much in line with what we were expecting the last time we chatted, you and I. I mean, we're still looking at Russia to grow about 4.5%. That's close to Russia's potential, but really, it's not balanced growth. We've seen it consumption-driven. The very most recent data has started to see a bit of an uptick in fixed investment. If that continues, that would be a good sign. But one of the risks out there is that as the election cycle picks up more strongly, we might see some investors hold their fire and wait to see exactly what the investment environment is going to look like.
Well, you covered a lot of different things there that I want to get a little deeper on. Let's talk about consumption. This is, when you're saying that, you mean the Russian consumers really right now are driving this economy. What are they doing that on? Are they earning more money? Is that a sign that there's more privatization going on? Is that just a general sign of health in the economy? Or are they doing that on credit?
Great comment. It's a bit of a mixture. Actually, initially it was based on more government spending, pensions going up, public sector wages going up, and government pump priming in a sense. Now there's starting to be more credit to households, and just recently starting to be more credit also to businesses. But really, we also saw Russia's cash for clunkers help some consumers out, and so Russia is now again the largest car market in Europe, surpassed Germany again. So we are seeing Russian consumers strong. The risk is, though, that the government has gotten itself quite overextended in our view. They don't have a lot of scope to continue increasing spending. Consumer debt is fairly low, but overall foreign debt in the whole Russian system is getting high. So we do need, there is a need in Russia for more investment, particularly infrastructure. And they have some big events coming up, the Winter Olympics and others in the region. So
Rachel,
we are waiting to see them happen.
Let me try to isolate some of the things the government faces. One thing they can't really control is the price of oil. I was reading one report today that said, you know, if oil is not at $125 a barrel, this is a country that can't balance its budget. How does that impact your growth forecast, and what does the government do about it?
Sure. Well, in the short term, what the government does is if oil is below about 120 Brent or about 110, you know, sort of WTI, they might have to either draw on their past savings, and they still have about 150 billion US dollars in savings in their two sovereign wealth funds. Or that what they could do is they could step up the privatization plans that would bring them a bit more revenue, and it would mean they wouldn't have to take on more debt. Now, the government actually has space to issue more debt. Government debt is very low as a share compared to other emerging market economies, and especially compared to the U.S. and Europe. So they have some space, but
Rachel, there's been
given the oil price.
There's been a lot of talk. I'm going to break in here because I want to make sure we cover a couple things.
Please.
There's been a lot of talk about privatization. We've heard both from bankers going there, mining opportunities there, taking a close look, not necessarily seeing a lot of inflows into the country yet in terms of foreign direct investment. But is the government really committed to privatizing?
I think the government's is not willing to relinquish control of these key state jewels. They are willing to partially privatize, but what we're talking about here are minority stakes in some of these key corporations. So now there are some investors who are going to be interested in those stakes, but this is not really an opportunity for people to take on strategic stakes and really change the operating principles of some of these companies. So yes, we will see more. And I actually think if oil prices trend down a little bit more, we could see privatization and some improvements in the investment climate become even more likely. But one of the things that tends to happen as the oil price rises in Russia, often policymaking doesn't necessarily improve. And I think we'll see government focused a bit more on making sure the population is happy, making sure incomes are going up. They're going to be helped a little bit in that by the fact that food prices have trended down a little bit in Russia as they have elsewhere in the world.
Rachel, unfortunately, we have to end it there. Always a pleasure to have you on. And, we do know that the presidential election in 2012, we're going to have you back to talk a little bit more about that at some point. So look forward to having you back on. That was Rachel Ziemba, Senior Research Analyst at Roubini Global Economics, with a close look at the Russian economy. We'll